Hello traders, hello everyone, my name is Gregor Horvat and welcome to our new episode Surfing the Elliott Waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the euro dollar, euro pound, S&P 500, silver and even dollar yen. Now if you recall, we are still actually tracking this ongoing weakness here towards parity on euro dollar, so there is room for more downside, especially after this broken trend line support. So I think that wave C is now in progress, and as I said, parity could be seen. Now wave C is a motive wave. What is a motive wave? Well, motive wave, it's a 5-wave structure. So before we can say that bear market is coming to an end, we need 5 waves down. Well, the ECB can certainly change the flows here when they will finally turn hawkish, and after maybe the Fed will stop with raising rates. So we will see if these policy shifts will also impact the euro dollar from a technical and fundamental perspective. I definitely think that there can be some very interesting reversals in the second half of this year. So as I said earlier, we have wave C moving to the downside. It should be made by 5 waves because it's a motive wave, and here we are tracking wave 1. Wave 2 was a flat, very nice extended wave 3. Okay, so we are aware of potential wave 4 rally. However, on the short-term basis, we also need 5 subwaves within this 5th wave, so that's still not the case yet. Okay, so if you look at the 4-hour chart here, well, there is room for more weakness. Clearly there is a downtrend in progress. You have lower lows and lower swing highs, so this is a downtrend, and looks like that this is now very slow price action. Notice that the first recovery here was clearly in 3 waves, and afterwards we have seen just continuation of this choppy price action, this tight range. So I think that this could be a way for possibly even a triangle, but there is a risk for another retest of 106.50 area, where you have also this 38.2%. So there is also a falling trend line, meaning that there can be a very nice resistance up there. So as long we are trading below, I would say below 107.50, there is a chance for another final sell-off for this wave 5 to complete higher degree wave 3. So for now, long story short, euro dollar is still bearish, but we are aware that this support, the strong one, may not be far away. Ideally at a new low. Now let's take a look on the euro pound. Now euro pound could be maybe even more interesting than euro dollar at the moment. Why? Because ECB is, with the latest comments, they are trying to turn hawkish. They expect new rate hike this summer. So obviously this could maybe be the different policy compared to Bank of England, where based on the recent data and policy updates, they are somehow not that hawkish. They are more like a dovish. So they're aware of the situation, and they are even a threat for potential recession. So this is what the driving the euro pound to the upside. Now if you look on a higher degree time frame charts, where we are clearly at a very nice and strong supports here. When looking at this monthly chart, we are retesting 2017, that was 2020, and now you have 2022 swing low. So looks like some very strong levels here with the price at the lower side of the range. So I would be aware of potential recovery here. I also think that it's important to keep an eye on this daily breakout. Notice that price is coming higher out of this downward channel and currently testing the upper channel of this bullish recovery. But I think that this breakout could easily happen in the upcoming days, especially when we will have even more hawkish comments from the ECB. So this could potentially lift this pair towards 0.8660. Okay, so I'm looking for a move into this area in the near term, and the reason, as I said, is this reversal from a new low recently, which came after these 5 waves down, and even after this ending diagonal here in a wave 5. So I think that more upside here could clearly be in the cards. Now let's take a look on the stock market. So here we have the S&P 500. Let's not forget that I'm still trying to stay with this bullish trend. I'm aware that there is a risk that market will see much lower prices, especially because obviously the liquidity is taken out from the markets because of latest interest rates decisions by the Fed. However, they may quickly stop with this policy, or at least uh, just slow down a little bit, and this could very quickly be again very supportive for stock markets. So I'm still observing this to be like a wave 4 setback. We have a very nice free subways from the highs, and if you look here on this daily chart, well, there's very nice drop so far into the lower side of this pattern. At the same time, notice that VIX, the fear index, is still somehow at the upper side of this range. Based on latest readings, if we look back from back 6 months back or so, you can see that always when VIX has moved towards this upper side of the range, we have seen a very nice reversal to the downside. At the same time, stocks rallied. So I think that there is a very nice support not far away here. Of course, there is a risk for deeper support to retest around 3,800. If you look at the 4-hour chart, I will give you the reason why. So far I'm tracking this free wave drop, okay, as an ABC, but I'm aware that maybe this whole drop from that high could also be not an ABC, but rather a WXY. So you can see alternate labelings with WXY. In such case, the upcoming bounce will be corrective, and then you see another drop. But in either case, I think that the whole drop is corrective, and that sooner or later we will attract some buyers. So the only question is, what will be the structure of an upcoming recovery? Will this recovery be in 3 waves, or will be in 5 waves back to the former wave 4? If we'll see a 3 wave recovery back towards 4,300, then I think that we will see more upside. It's a similar idea, similar approach like we discussed last time. We said that if this recovery will be in 3 waves, we should stick with the bearish call. So for bulls, we need 5 waves up, but so far that's not the case yet. So we have to be patient here, but I think that there will be some interesting supports and reversals still in upcoming months. Now let's take a look also on silver. Now silver has seen a very strong push to the downside recently, again because of the Fed. They are obviously trying to fight inflation, and that's why traders are somehow going out of gold and silver. But still, on the longer term, I think that inflation may not be easy to stop. So in my opinion, there are going to be strong supports on metals, especially particular gold and silver. Now silver is coming back towards 21 22 dollars here. You have this previous swing high, so very interesting longer term support. I think that market could rally away from here. Now if we look closely, however, we still do not have completely full structure to the downside. Notice that we adjusted the wave count recently, and now we are tracking 5 waves drop for a wave C. Okay, now the ideal supports for this wave C would be equality level. So you take distance of a wave A and then measure it from a top of or end of a wave B, right? So you get $18 as a perfect support, okay? But notice that also wave C still is not substructured by 5 waves, so clearly there is a chance for more weakness. However, we cleared a lot of stops probably here below 2020 September levels and 2021 lows, so there can be a rally coming now, at least in 3 waves. If you look here on 4-hour time frame, you can see that I'm looking this to be a wave 1. You had a wave 2, nice extended drop for a wave 3, and now you would typically expect a wave 4 rally back into the former wave 4. So this may take time, but on an intraday basis, there could be some very interesting, maybe even some short-term setups for further rally, since we can see a very strong bounce. And if this market can stay bullish even after US CPI figures today, well, this could potentially mean that short-term bottom is in and that wave 4 is headed higher. Now let's take a look on dollar yen. So since I mentioned the USCPA data, this is very important to track. As you know, Powell also mentioned last week that the data will be important whenever they will decide for a next hike of 50 basis points, maybe 75 basis points. So there's a speculation that if inflation data will be higher than expected, then obviously they may do more hike in the future, and this could potentially mean that US yields will rise further and dollar yen could follow. However, what we are seeing recently is that the US yields are actually moving lower, while the treasury notes, as you can see here at the bottom of this chart, are moving to the upside. We are seeing break to a new high, so dollar yen is following the pattern here to the downside because the yields are coming down. So we'll see if this price action will stay in play here even after the report, after the release. But from an Elliott wave perspective, this reversal is not actually a surprise. I mean, we are breaking this trend line after these 5 waves up. So these 5 waves up puts a top in place. We moved very nicely here into this resistance area in the short term. So current break can be very important, but as I said, we should see a daily close and still more weakness after the report to make sure that we are headed to the downside here. So the first support here for retest would be for this higher degree wave 4 would be 128.65, and then you have 127. Okay, so that's the area that we should pay attention on if we stay below this trend line. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video and talk to you soon. Bye.